Day. Let's welcome in Samir Arora. He's joining us. He's a market master today, founder and fund manager at Helios Capital. Samir, it's good to see you. Thank you very much for being on the program. So I have two questions, and you are someone who's invested and watched not just India, but regional markets very closely as well, China as well. So let me start with that. Is this time different? That old question. It rarely is, but let me frame it that way for China. And second, I mean, is this a real thing? And second, flows. We saw some very large selling figures in India over the last 2 days, foreign selling. Is that on account of China as well? Go on.
So second part, not so clear, but first part is it can go on, I think. By the way, in our fund, we used to own Alibaba and C-Trip, and we bought more Alibaba even yesterday because I think it can go on for some time. And actually, I don't think it's a bad thing if China market does well for us, as in mostly for India funds. But before that, so the China thing, first of all, the government has to take a call now whether they are going to make sure that they are able to revive confidence, revive this thing, or they make it as a given. They have the money, they have a lot of advancement in technology. They have to basically revive sentiment of the consumer. There was maybe some pressure even for people who are rich to not openly spend because of this shared prosperity and things like that. So if they let it go, like for India, for many years, we were able to say that although there is a big divide between the rich and poor, but at least the rich are doing premium and the K recovery and all that. So you don't believe that there are many super rich people and middle class and upper middle class, which all they need is the market. A market means the government and whatever to let them be as they are rather than always show that they are, part of a shared system. So it can go on, I think. And maybe some pockets do it only, but it can go on because their market was really cheap. It was just that it needed a trigger. But I think it is not bad for India per se. I don't think that beyond some shorter term thing, investors have to sell India to buy China. Because India, I don't think in aggregate people are overweight. There might be 1% plus minus overweight. So if you were underweight China, that would have come from the rest of the world. India and China, even an emerging market fund combined would be, say, 20 and 25, 26 now. So half the investment of people who are able to move this around is in non-India, non-China. The other thing is if the Chinese market does well, and if the US market does well, the Indian fund managers, the mutual fund guys, they will have less reason to sit on cash. Our premium to emerging markets, our premium to China has shrunk because the Chinese market is up some 25, 27%. So we are some 5-6% cheaper than we were. Just to finish one more line. So meaning the market used to say that Indian market trades historically at some 40-50% premium to emerging markets. And in recent periods, it has become 165-170%. So that does not mean it was 20% overvalued. That means it was 170 divided by 150. Correct? Because 150 is equivalent. So it was 10-12%. Let us say, if that was one issue, that it was 10-12% more than the longer term average. Now that it would be, according to me, 5-6% more than longer term average, just with China moving up 25%, because that would have shifted the valuation by 5-6% at an index level for emerging markets. So I think you don't want China to blow up and feel happy on that. If they're doing well, it's okay. We may underperform, but we will not be in absolute negative.
But Samir, hi, morning. Great to be listening in to you. But the thing is, when $3 billion leave the market in 3 days, it does catch people by surprise, right?
Correct.
I mean, we were sitting on a high horse saying we don't need the foreigners and that's fine. We have local money. But exactly, I mean, we've forgotten what FII selling really feels like, and we got a nasty reminder since the start of October. How long can that continue?
But that's what I'm saying. I don't know whether it's related to China only, because there are three issues going on simultaneously. One is China, let's say, one issue. Second is that if people had some model on which they are doing this futures arbitrage and all these millennium kind of guys. And the third is that separately, I think it is going on in parallel that if you have more than 25,000 crores in India, you need 100% disclosure of your end investors. And many of these platform guys will have more than $3 billion and they have to basically reduce their weight in India. So who knows what is the exact reason? But I think the best answer for that would be to call some broker and ask him that is it hedge funds who are selling? Is it long? Because my big picture thing without overly knowing this is that nobody does it like that. No regular long-term or even medium-term investor sells a market which is, at least in the last 3 weeks, zero, to buy a market which is up by the time he ends up buying it 30% higher. And mostly the stocks that he will like to buy are 40% higher. Mostly you do it a little bit more gradually. This kind of thing normally is a burst in the beginning. And that can be easily countered after some time with the domestic guy sitting on cash and some other guys who will feel that a 30% move is too big. I just think big picture, relative India-China flow is not going to do it, but who knows?
Got it. No, just one point. Hormuz was just telling us, he looked at the top stocks. He said 5 stocks basically were responsible for the, I think 70-80% of that 15,000 crore sell number. There was Reliance, there were the 3 banks, and there was, so very concentrated. And the fact that there were 3 banks kind of looks like it's foreign related.
No, of course it's foreigner selling, but the question is whether it is China related or it is arbitrage related and other things.
Samir, hi, morning. So we're now almost approaching a near 5% cut from the top. And, at least in the last couple of years, we haven't seen a fall greater than 5%. So now investors are saying that is this the time to buy stocks or buy any themes that they like? So, if you have to find opportunity now in this little bit of a correction, what would you recommend?
So first thing is that 5% correction can happen without a reason. If this 5% correction has happened for reasons like Israel attack or Iran sending missiles to Israel, or it is because of Hamas and whatever, and it is because of China having done this, then it's a pretty decent market that with only 4-5% fall, it has absorbed all this. So I think the market continues to be strong because my big picture thesis is that India itself was doing okay. If the rest of the world is also doing okay, then there is no reason for us to feel too negative. The only issue could be this geopolitics, but as of now, even the oil prices are not that high, which show that there is an imminent attack happening, although President Biden said some few things which confuse the oil guys for some reason. But coming back to us, so we, first of all, have been more or less fully invested, so we don't have much, but the general big picture thumb rule would be any stock that you own which is down 5, 7, 8% without any reason, you buy 0.5% more of that. For us, these stocks remain primarily right now in the financial sector because the IT sector, we have just bought, now we have some 13, 14% in IT, but we need to wait for their results and guidance and language and how they say, because we have all taken it for granted that the worst is over and that there'll be some improvement from here, but let us again hear it from them. And in consumer, I genuinely think that there is a slowdown and that there is too much competition and we come up with a new excuse every month. Sometimes it is big rain, then big summer, then politics, then cold, because now they are saying it's very cold. So then they suddenly say, okay, let's buy some cream guy because somebody's skin became dry, so they want to buy those shares. So I don't like that. I like very, sort of somewhat reasonable prediction of growth or sometimes very high growth like these food delivery companies and all that.
Samir, so I just looked at this is of course as of yesterday's close and maybe today numbers would be a little. So Axis, HDFC, ICICI, they've all fallen. Axis has fallen 8% from its highs. HDFC Bank 5.5%, ICICI 5.5%, Reliance 8% from the highs. Tata, and actually autos have taken a knock between 6, 7, and 8% average. Tata Motors, Bajaj Auto, Maruti. What you were saying, right? I mean, the pullbacks
so I would say that
seen.
autos should fall 20% as far as I'm concerned, and they would still be overvalued.
Yeah, you've not liked autos for a while. Yeah,
and that is very blatant. I mean, it is just too much of living in our own world. But for financials and even some consumer here and there, You can add, we will add, or we have added.
Okay, all right. The other sort of thing has been earnings. So consumption is slow, but looking at some of the previews which have come in from specific sectors, generally it's expected to be a pretty slow quarter. Actually, people have mostly written off Q2. They're looking at H2.
So it's very easy to say now, as soon as the results are bad, to say they have written them off, because this whole quarter, the only stocks that went up were these consumer stocks because of good monsoon. Now they say there was too much monsoon. Actually, I have a bigger issue with this, which is to do with the fact that these traditional consumer guys, I think the basket of the consumer has changed into his, as in regards to his preference. So if there's more rain and somebody makes a few 1,000 rupees more, does he upgrade his toothpaste, or does he spend more on a phone or on something which he can show on social media or in a photo, or does he travel a little bit more, or does he buy a more expensive shampoo or a soap? I think the basket has changed, and even this telecom price hikes have basically meant, say, a 300, 400 rupee per year price hike, say 30 rupees per month, multiply by 50, 60 crore people, and that is a big number that has gone to the telecom guys. So I think basically we are not interested in the old consumer companies where you are betting whether the growth is 3% or 4%. And that is also because of rain or no rain. And we don't like the consumer durable companies, because the consumer durable companies, the competition is just too much. Everybody wants to get into the same making of ACs and making of microwaves and making of air conditioners, from the the Japanese to the Koreans to every Indian guy like Reliance, Flipkart, all going to the same underlying OEM manufacturers to make under their own brand. It's just too much.
Yeah. I just have since we have you, and I must ask you, there's this new F&O curves, etc., which have come in. Quick thoughts, if any, at all, on how this is going to work out. We will see big fall in volumes. And your thoughts on BSE, Samir, if you have a view.
So actually, I don't know about BSE, I don't have it, but big picture, my thing is that the market in India has to, for a few days, play dead on those sectors or stocks where the government or the regulator is trying to do something which broadly is negative. So let's say you increase capital gains tax. If within 2 hours the market goes up, it gives confidence to the government that we should increase taxes even more because these taxes were ignored. In the same way, if SEBI or the regulator is saying, I think the futures and options volume is too much and I have to cut it down, and within 2 hours the broker stock is up 5% and the stock exchange stock is up 8%, it gives instant feedback to the regulator that this was not enough.
Yeah, but Samir,
you have to act that this is such a difficult thing for a few days collectively.
But to be fair,
it doesn't matter the next time. So I think both will be increased.
No, but to be fair, Samir, to be fair, these stocks went through a lot of correction, right? Because the announcement was just a culmination of a discussion paper. It went on doing the rounds for several months, and we saw the price damage on an angel.
I'm not joking, but I'm joking.
What are you joking?
On first day, you have to make it look that it was very tough and not.
Yeah, that's true. It's very, very onerous. Tax hikes, any higher regulation. You have to show that it's very difficult.
But Samir, you're giving the secret away. You're giving the secret. If you got to do it.
Because I'm a transparent guy, I tell everything I feel.
But speaking of transparency, Samir, to round this conversation up as we move to our next guest, who's actually tracking equity markets around the world, CLSA's chief equity strategist. So as we move to Alexander, I'm coming back to the final point, Samir. You are still buying Alibaba, right? So for every incremental, you bought yesterday. So that's the question. That for fund managers, that for all the new money, even if it is tactical short term, are you going to buy China shares or put that money to work here in India?
No, that's what I'm saying. It doesn't happen like that. That fund doesn't buy India. It's a global fund and all. I'm saying India has enough story and an ongoing thing for the world to not take it as a trade-off. And by the way, how much Alibaba we bought compared to what we buy in India, the proportion might be 30:1 or something. So the point is that what I'm saying is the fact that China is doing well for a few days, yes, for maybe 10 days, 15 days, it can happen that somebody who's really was short there or really was underweight doing it. But just like you saw today, the GQG guy saying that it's a trade, not everybody will buy into it. And particularly the bigger guys, the endowment type or whoever has walked out of China on some serious view that they have of that market are not even time-wise able to change it in a few days or in a few months. So this will go on. Life goes on, but overall, it's not a bad thing for China to do well. I mean, because you need the rest of the thing to work well so that we don't stand out also beyond a point that our premium is so much, we are at all-time high relative valuations, and so on and so forth.
As they say, nazar na lag jaye, Samir, right?
Correct. You have to let it come along.
Super.
All right, thank you very much, Samir.
Thank
It's a pleasure speaking with you, and hope we can do this more often as we continue to track what's happening in, China, India, and of course everything else. 3-4 things up in the air all together, guys.